Welcome to Phillip Futures Market Watch. My name is Howie Lee, Investment Analyst with Phillip Futures. This week, we will discuss the outlook of the Indian Rupee. The man you see on the screen is Narendra Modi, leader of the Bharatiya Janata Party in India. He is in line to be the next Prime Minister of India after recently winning the national elections. So, why is Modi's appointment as India Prime Minister important? Modi is seen by the markets as pro-business and investment friendly. Many corporations and financial institutions, ranging from India's conglomerate Tata Holdings to financial banking giants Goldman Sachs, believe in Modi. They believe Modi is the right man in bringing India out of its economic slump. What is it about Modi that makes him such an attractive proposition? So Modi was, and still is, the Chief Minister of the state of Gujarat in India. He has been governing the city since 2001, and his economic vision revolves about privatization and having a small government. Under his leadership, Gujarat has experienced huge economic growth and real estate investment deals were abundant. Modi himself started many financial and technology parks in the state. He also played a key role in boosting agricultural output in Gujarat, despite it being a semi-arid state. This was very impressive given that it was during a period where groundwater levels were falling in mostly other states in India. With a track record like this, it is little wonder that markets are relishing Modi's entrance as Prime Minister. Just look at how India's stock markets have rallied in anticipation of Modi being the Prime Minister. The Nifty index has comfortably risen 15% this year, while the Sensex has risen about the same. In the process, both have set record highs, a testament to the faith that markets have in Modi's leadership. Even the relatively flat Indian rupee is showing signs of life. The rupee has trended within 60 to 62 rupee per dollar since September last year, but since elections started in April, the rupee has tested a level of 60 repeatedly. As Modi's chances of victory grew closer, the rupee broke below the level of 60 and stayed below the level since then, showing that the strength of the Indian rupee is no flash in the pan. So the question remains, if the rally that we are seeing in the Indian rupee is sustainable. It was less than a year ago that we saw a massive sell-off in the rupee. Then, the rupee easily depreciated 20% against the dollar when former Fed Chairman Ben Bernanke spoke of tapering. That incident, however, appears a distant memory, given the current election euphoria of Modi. So what the market is doing right now is that it is attempting to price in the economic reforms that Modi might potentially bring into the country. In other words, investors are seeing the success Modi has brought to the state of Gujarat and translating them into a nationwide development. We tend to be cautious of such rallies because these run-ups are not backed by economic fundamentals. We have to be mindful that governing a country is an altogether different task from running a municipal. What Modi has achieved in the state of Gujarat might not necessarily be translated into the country as a whole. It is therefore our opinion that this rally is overstretched and it should undergo a technical correction to the fair value of 60 to 62 in the medium to long term. Now, having said all that, we believe that in the short run, euphoria within the markets is still high. We expect the rupee's rally to continue in the short run. The Indian currency may yet strengthen to 58 rupee per dollar or even 55 if there are early signs of Modi fulfilling his election promises. In the medium term, we expect Reserve Bank of India Governor Raghuram Rajan to potentially ease the currency back to the level of 60 to 62. Rajan mentioned in April that an exchange rate of 55 rupee per dollar is too strong for India's exports. His comment is backed by India's Finance Ministry, who has also similarly suggested that 60 to 62 rupee per dollar is a reasonable value for the Indian currency. We have come to the end of this week's edition of Market Watch, where we have discussed about Narendra Modi and his Indian rupee. For more information on the risks and returns of investing in currencies, please approach any representative from Phillip Futures for a further discussion. Thank you. Please subscribe to us on PhillipCapital YouTube channel and Facebook. Stay tuned for more Market Watch videos.